This is PwC's vision for analytics and AI transformation, an end-to-end solution that can empower your business to extract more value from your data. Whether you're in the business of developing cutting-edge products or trying to help provide customers with next-level service or fishing, we can team with you, helping you harness your own sea of data and fueling your bottom line.
Hi all, my name is Andy Palmer. I'm the co-founder and CEO of Tamer and serving as track co-producer alongside my good friend JP Chavet for Virtual Track 6, the CDOIQ Toolkit. I love the quote in Prashanth's session description, "You cannot manage what you cannot measure." I couldn't agree more. It's my absolute pleasure to introduce the next session. Selection of the data and analytics measurement entity to improve business performance. Before I get started, I just have a few housekeeping items. The session's being recorded. Any presentations will be included in the symposium proceedings. Video recordings will be uploaded to the CDOIQ YouTube channel 3 months after the symposium. And there will be Q&A session at the end. Please submit your questions via the Whova app's Q&A tab. And with that, I'll hand things over to Prashanth. Off to you.
Thanks, Andy. Thank you, everybody, for attending the last presentation of the symposium. I believe that the best is saved for the last, and I hope I can meet your expectations today. So I hope you are able to see the screen. So my topic is basically about the selection of the measurement entity which you need for data analytics so as to improve your business performance. So in the last 3 days, you have been hearing a lot about data and analytics. So we'll be a little bit specific here and we talk about what is that specific data people are talking about and how it can improve your business performance in your company. So having said this, so this is about me. You might have seen the intro, my profile. So basically, I do three things. As a consultant, I have consulted for over 80 different companies in my 25 years of my career. I'm an author. I've written these 2 books you can see right behind me. And I'm a professor as well. I teach data and analytics at IE Business School in Madrid. So last week, I was in Madrid. I just came back to Calgary from Spain. So let's go right into the topic. So what I have done here is basically looked at this whole presentation into 3 main areas. The first one is mainly about introduction and context so that we are all in the same page. Next, we'll get into the heart of this discussion, which is that measurement entity, which can help improve our data and analytics performance. And lastly, about the key takeaways and the wrap up of this presentation as well. So let's start first with the introduction and context so as to bring everybody to the same page. So what's data analytics? You must have heard about this many times, but I'm going to say this in a slightly different way. There are numerous ways in which data and analytics have been defined. For example, if you're in oil and gas, for example, being an asset-centric industry, their definition of data analytics is more concentrated on asset management, regulation, so on and so forth. But if you talk to somebody from retail or CPG, their definition of analytics is more about customer 360, inventory management, and so on. So we have quite a different definitions of analytics within the industry itself. Oil and gas and pharma on one side, whereas retail, CPG, media on the other side. Within the function, if you talk to finance, for example, their definition of data analytics is more about reporting, regulations, IFRS, GAAP, so on and so forth. But on the other hand, if you talk to somebody from supply chain or marketing, their definition of analytics is more about service and cost. And when you add the technology players into the mix, things become very complicated. For instance, I worked in SAP for a long time, and when I left SAP in 2012, they had over 200 plus products. So if you ask the people in SAP, what's data analytics? Their definition of data analytics encompasses CRM, ERP, GRC, BI, MDM, so on and so forth. But on the other hand, if you talk to one of my clients, SAS, where I consulted a couple of years back, their definition of analytics is more about dashboarding, ML, predictive analytics, and so on and so forth. So there are varied definitions of data analytics which people are talking about. So what's my definition? What is that particular definition that can satisfy the people in oil and gas, retail, or finance, supply chain, technology, business, and all those different stakeholder groups we have? So my definition of data analytics is basically using data to ask the questions to gain insights for decision making. So I talk to my clients and they say, Prashanth, we want to do data analytics. Should we hire a Python developer? Should we move our data to the cloud and all those things? I said, that's all important. But what is required right now to start your analytics project are two major things. What are the questions for which you are seeking insights for? Next, number two, do you have good quality data to derive those insights? And what is the purpose? The goal is decision making. So my definition of analytics is basically using data by asking the right questions to gain insights for decision making. So why data analytics? You have heard this many times, especially in the last 3 days. I don't want to go again here, but being a data analytics person, I've added numbers to this. The benefits of doing data analytics from McKinsey, from MIT, from Gartner, BCG, Forrester, and all those things. So value of data analytics is known. It's been proven that data and analytics results in improved business performance. But at the same time, many data and analytics projects are challenged. Gartner says that 80% of the data analytics projects do not give business results. McKinsey says people spend almost 2 hours in a day just searching for data. IBM and Carnegie Mellon, they did a study and they found that 90% of the data in a company is never used. Forrester did a similar study and they came up with 73%. So by and large, a large amount of data in a company which has been captured is never used for any business needs. And mostly in today's world of ESG and carbon footprint and so on, 100 GB of data in a year produces carbon of approximately 200 kgs. This is from Stanford. So with all those things concerned or taken into consideration, can data be a liability for the business? Oh my gosh, what are you talking, Prashanth? For the first 3 days in this conference, we have been hearing data is an asset and you are talking about data as a liability. Tell me more about it. How can data be a liability for the company? I wrote a Forbes blog on this, why data is a liability, but quickly I'll explain 4 key use cases where data can actually be a liability for the company. The first one is cost. The more data you capture, the more cost you will incur on storage, on processing, on archival, on backup, so on and so forth. Number one. Number two, carbon footprint. The more data you capture, the more carbon footprint you will incur for your business organization. Today, we are talking about ESG, and most of this ESG is being tied to investments. Investment decisions today are primarily made on carbon footprint as well, along with other financial metrics. So in 2018, data centers just consumed 1% of the total electricity consumption, whereas in 2025, they're saying that data centers will take about 20% of the global electricity consumption. So what does this mean? The carbon footprint from 0.2% in 2018 to approximately 4% in 2025. That's a rate in which the carbon footprint is going to be happening because of the data that is being captured. Number three, risk. The more data you capture, the more attractive you will become to the hackers. More hackers typically don't go to mom and pop shops. They go to big organizations. For example, when they went to Equifax, for instance, Equifax spent almost $1.4 billion in fixing their IT systems. So that means the more data you have, more attractive you become to the hackers. And lastly, privacy. If you don't manage your privacy aspects well when it comes to data management, especially the customer master data, you will be in trouble. Cambridge Analytica came into limelight because of data and analytics. And it was the same data and analytics which resulted in their collapse and ultimately closure. So data is definitely an asset if you know how to manage it. So just capturing and storing data doesn't make any organizations data driven. So With this in background, Prashanth, what are the key, why are data analytics projects challenging? What are the reasons for which these data analytics projects are running into so many difficult hurdles? So there are many reasons for it. Gartner did a study and they say that it is primarily because of the culture and poor data literacy. Article published by Randy Bean and Davenport in Harvard Business Review talks about data culture as well. So, and we did a study in our company and we looked a little bit ahead and we said it's data culture for sure, but the number two is actually not data literacy, it's quality data. So culture, quality data, and data literacy are the three main reasons when it comes to getting value out of data analytics. So if you can address these three aspects, especially the data culture, so that you have a kind of a plan to get value out of data and analytics. So now, what are the necessary conditions for this data culture to happen, for my analytics projects to succeed in my enterprises? So what should I do, Prashanth, so that I build the right data culture? Is it just going to, for example, going to more conferences or getting some books or getting trainings or whatever? What should I do to build the data analytics culture in my organizations? So the three major things that you need to focus on to build the culture of data and analytics in your company. The first one is about measurement. At the core, data analytics is all about measurement and performance improvement. So you capture the data so that you can be better than where you are today. That's number one. If you don't believe in measurement and performance improvement, you are not going very far in your data and analytics project. Next, number two, service mentality. That means focus on the customer. It could be an internal customer or an external customer as well. Prashanth, how is service related to data analytics? If you have to consistently provide the service to your customer, that means you need a point of reference. And that point of reference comes from data. Okay. Prashanth, I'm in HR. I don't have a customer. Well, how can I build a data analytics culture? Customer doesn't have to be the one who's paying for your goods or services. It could be you and your internal customer. So when you talk about customer, whoever receives your product or services, internal, external, can be considered as a customer. So if you have a mentality or a mindset to serve, so that means you are building the right analytics culture in your organization. And lastly, it's about focusing on consensus versus hierarchical culture. That means if your decision-making culture in your company is focused on title, position, seniority, and so on and so forth, you are not going very far in your data analytics project. So if you can focus on your data and insights and the merit, so you have a good chance of getting success out of data and analytics. So on these three parameters, these three factors, I wrote a blog as well. So if you're interested, you can go and read this article. So ultimately, if you believe in measurement for proactive business performance, then you are into data and analytics. Okay, but now what to measure and how should we measure it? Okay, I get it, Prashanth, what you're saying. It's about measurement for proactive business performance, but can you share some details about what should we measure, what specifically data objects you are talking about, and how can we make this happen? How do you measure this? So
Prashanth, we just got a couple of messages from people that your microphone is distorting again. If you just sit back a little bit, it probably will sound a little better. I apologize for interrupting you, but we just want to be able to hear you.
Okay, so I'm almost like 6 inches behind now.
Okay.
Again, data. Okay, so let's talk about this data and analytics measurement entity. What is it? What is that specific entity which we can look at to improve the performance of the data analytics programs in the company? So before we go there, a little bit of an overview on the different types of data we have in a company. So broadly, you can look at the data from different perspectives. From a storage perspective, you can look at structured or unstructured. From a security perspective, you can look at open data, or you can look at private or confidential data. But primarily from an integration perspective or from a purely business perspective, you can look at the data into three major types. The first one is about reference data. What is that? It's all about business categories. like your plans, your chart of accounts, your currencies, your account groups, your product groups, so on and so forth. Any data where you can classify your organization is basically your reference data. The second type of data is master data, which is all about business entities. It could be your vendors, it could be your employees, customers, GL accounts, so on and so forth. Anything to do with the nouns or the entities is master data. And lastly, the third type of data is about transactional data, which is about business events. It could be your purchase orders, it could be your sales orders, your invoices, your price list, your shipments, remittance advisors, anything to do with the function of time or which is an event in the company can be classified as transactional data. But the data actually flows from one to another. For instance, if you take purchase orders, for example, it might have currency, which comes from the reference data. It will have the items and the vendors, which comes from the master data. And it will have a bunch of pure transactional attributes like quantities and prices, which again come and become a complete transactional data, which is the purchase orders. And behind the scenes, the IT people are also looking at structuring the data, and that's the metadata. But from a business perspective, broadly, you can look at the data into three major views. Reference data is about categories, master data is about entities, and transactional data is about events. So what to measure? So given that we have these three major types of data, which data type should we look at? So again, I'm trying to peel the onion now. The first is we talked about the importance of measurement. The next is we looked at the different types of data. And within those three types of data, which one should we focus? The one to focus on is primarily transactional data. Why? If you look at the other two, mainly the reference and master data, they are reasonably static in nature, and the quantities are relatively low compared to transactional data. And on the other hand, if you look at the transactional data, they are very contextual. That means they are time sensitive, they are location based, and they are role centric as well. So this makes transactional data a little bit promising compared to the other two to focus on so that you can get value out of your data and analytics programs. So let me give you an example. So last year, I worked for a logistics company, which is one of Canada's biggest logistics company. And in this project, we were supposed to do Customer 360, which is all about getting more insights about the customer. Okay, and we had a dedicated data governance team with almost 4 people, full-time, looking at the quality of the customer masters. Okay, good. How many customers do you have? We have 500,000, 500,000 of them. Okay, so so this team was primarily looking at all the data quality attributes of this 500,000 customers and looking at, okay, this is missing, that's missing, so on and so forth. Okay, good. So out of this 500,000 customers, how many did you do business in the last 18 months? It comes out to be they just did business with just 4,000 of them. So the database had 500,000 customers, but the real business transactions were just with 4,000. So what's the point in doing all this analytics and deriving insights of the remaining, almost like the remaining customers, where the business transaction relationship is just with 4,000 of them? In fact, we found that 450,000 customers plus had not done any business with this company in the last 8 years, but still this data governance, data quality team was producing these reports. This attribute is missing, that attribute is missing, so on and so forth. So which is actually resulting in more confusion, noise, and all those things in the company. So what I'm trying to say here is that transactional data has some promise. It's because it has got some characteristics or attributes which makes it suitable for getting value for your business organization. So let's go further and see why measure transactional data. 5 main reasons why transactional data is really important. The first one, it deals with business resources. Businesses, any organization for that matter, is always constrained with business resources. It's always limited in nature. Whether you talk about time, money, location, skills, or anything, any business resources a company has got is limited in nature. And transactional data or transactional events are associated with business resources. Next, number 2, transactional data has got a financial value. It has a monetary value. It impacts your company's bottom line. So you might have 500,000 customers in your database, but who cares when you're just doing the relationship or businesses with just 4,000 of them? what really matters to me is not that 500,000 customer master data. What really matters to me is those transactional data where I have orders for the 4,000 customers, because what's important to me is about the financial value. Number three, the transactional data has got a twofold impact on accounting. That means for every value that is received, there is a corresponding value that is given as well. Basically, transactional data hits the general ledger. So if you talk about IFRS, GAAP, and all those things, they are talking about transactional data because that's where the activities are happening, so it hits the GL. Number four, transactional data serves as a legal record for the counterparty. So in any transactional record, you have a counterparty that is that's there. So it is a legal document. It is a relationship document between the two entities. So it brings those two entities together, and that's where it's a legal document as well. And lastly, transactional data promotes performance management and decision making. If you look at the transactional data, it has got typically numerical attributes. So what? Those numerical attributes can be used for statistical computations. You can do all the kind of work which you want to do with predictive analytics, descriptive, exploratory, variation, so on and so forth, and use those numbers to understand your current performance and ultimately use it for decision making. So if you focus on transactional data for these 5 main reasons, then you have a better chance of getting value out of data analytics projects. Now the second part, how do you measure this? So there is a bunch of transactional data in our company's Prashanth, hundreds and thousands of them. Which one to pick? Where do I start with? The first way to start is looking at your business objectives. Typically, any company has got 3 main reasons why they exist. Number 1, to increase revenues, to reduce cost, and the third thing is to mitigate risk. So link those transactional objects to one of those 3 things. If your transactional data or a transactional event is going to satisfy these 3 attributes, then you have a better chance of getting value out of data analytics. Okay, that makes things a little bit easier. Do you have any other tips apart from this? Number 2, look at those transactional data which is under your influence and control. What does this mean? Let me give you an example. A couple of years back, I was working for an oil company, and it was an upstream oil company. And we had approximately about 8 to 10 people in the company, in the team, who were doing predictive analytics on finding the price of crude oil. A great team, and they had almost like 200 plus variables, including not just about the macroeconomic factors, but including commodity prices such as gold, copper, and all those things which they were using to find out the price of crude oil. Now, the point here is that, does this really matter? So why? The first thing is you are sitting in a corner in the world and trying to predict the price of the crude oil, which is also done by many banks, many consulting companies, so on and so forth. Now, let's assume that even the prediction which you are done using your regression model is suitable for you. Why can't you leverage some other insights which is already there and work on it? That's number 1. Next, number 2, is there anything which you can act to which is under influence and control? Let's assume that one of the independent variables in your regression model is copper prices. Is there anything which you can do as an oil company to influence the price of copper? Let's assume that one of the prices is of weather. Is there anything which you can do to talk about influencing weather? There is very little. So find those transactional objects which are under your influence and control. So what are those? Let's take in the same oil company, for example, let's look at spend performance management. Look at those attributes which are affecting your spend management, like you can manage your quantities, you can manage your payment terms, so on and so forth, so that you can do something about it. So if you had to pick the price of crude oil, which is a transactional data, or if you look at the purchase order measurement, so pick the one which is more under your influence and control, which is about the purchase orders. The second thing is about net working capital. Why don't you focus on net working capital, which is used for measuring the short-term health of the company, where you can better manage your current assets and liabilities such as AP, AR, cash, debts, and so on and so forth. So the second tip which I have is pick those transactional objects which are under your influence and control. And the last one is pick those transactional objects where you can improve, where you can get optimized. What does this mean? Look at those transactional objects which can affect the operating income of the company. Look at those elements, look at those transactional objects which are going to hit your EBITDA. If those are the elements which are hitting your EBITDA, you have a better chance of getting value out of your data or your data analytics projects. So these are the 3 tips which I have for you to work on the transactional objects so that you can be a little bit more specific about where you what you can do to get results from your data analytics projects. So as we said, if you can't manage it, if you can't measure it, you can't manage it. So how do you measure this? So with KPIs. So what is required to make these KPIs happen? 4 major things. What are these, Prashanth? Data, which you have learned a lot in these 3 days for sure. Data is oil, data is oxygen, blood, and all those things. Of course, we need the models as well, which is algorithms. But there are other 2 which not many people talk about, which is ethics, which is good. In the last few months, I've seen there is more importance on ethics. But still, the one aspect which is not really discussed these days is assumptions. Oh my gosh, what are you talking here? Assumptions in data and analytics? I thought data analytics is all black and white. If you put the data into your model and you get a result, which is a p-value is less than 0.05, and then you are about to make a decision whether this independent variable has to be included in the regression model or not. Why are you talking about assumptions, Prashanth? I'll give you a small story here. Why assumptions really matter in your data analytics projects. First thing is, there is nothing called as perfect data. The 100% quality data doesn't exist. Why? Because the business is an evolving entity. It's constantly changing. Mergers and acquisitions, divestitures, new product introduction, regulations, all those things are constantly happening in the business. And that means the data, which is a recording of the past event, is always catching up to what's happening on the business front. So there is nothing called as perfect data, which is there. So you always are doing a catch up so that you can augment those missing data with whatever data you have so that you can derive the right insights. So let me give you an example. Let's say that you have a delivery of 10 shipments. Now I ask a question to you. What is the measure of centrality? Oh, it's simple, Prashanth. We just look at mean, arithmetic mean. And I say, why not median? Okay, this is a new thing. We learned about mean and median in high school, but what are you talking about in assumptions? The technique or the algorithms, arithmetic mean, is used only when I'm assuming the 10 delivery shipments I have are independent in nature. Okay, so what is assumptions for median? The assumptions for median is these 10 delivery items may be or may not be independent in nature, but they might have potential outliers as well. So if that's the case, I'm going to use median. Okay, so you have a mean and a median, and the use of those 2 techniques is dependent on the assumptions you are going to make. So what should I do to reduce the assumptions? Get more data. Okay, if I get more data, I lose time. So can I manage with this? So let's make an assumption. What is that assumptions? These 10 deliveries which you have are independent in nature. So I'm making this assumption and I'm going forward with my algorithm, which I'm going to select. So any algorithm, whether you talk about interquartile range or regression or anything which you are talking about, especially analyst-driven predictive analytics, has got an element of assumptions here. So overall, when we talk about KPIs or when we talk about analytics, there are 4 key elements that matter for deriving insights, which is data, algorithms, assumptions, and ethics. So what are these 2 types of insights, which we are taught 2 types of KPIs? Broadly, you can look at those KPIs into 2 major types, which are coming from your transactional data, which is the performance KPIs, which is to know, which is to understand what's happening. Next, number 2 is actionable insights. We have been hearing this word actionable insights for a very, very long time. It's almost become like a buzzword about actionable insights. So what is this performance insights? Performance insights provides visibility on the measurement entity. It gives you a choice once you have those insights, either to know or to act. I was working for a retail company, and after some few weeks, we came up with all the SKUs in the company and classified them into 4 categories: A, B, C, and D. A-class SKUs are fast moving. They move out of the shelves very quickly, whereas D-class items are slow moving. They just catch dust for weeks together. So we did a study and we said in the last 12 weeks, we found 15 SKUs that were consistently class D items in your 900 plus stores. And we sent a note to the territory managers. They said, okay, this is amazing work. We have been asking for this information for a very, very long time. And okay, so I got a question, that's why I paused. Okay, so coming back to the two KPIs. So they said, okay, we sent a note to the territory managers and said, amazing. So we were looking for this information for a very, very long time. So, and they came and they said, this is amazing, Prashanth and team. So 12 weeks, 15 SKUs, 900 stores. This is amazing work. So thank you very much for your for this insights. And I said, okay, good. So this is performance insights. I have given you this information which you didn't know before. Now, what do we do with this? So we need to act on this. We need actionable insights. So to act on this, so we need to, in my view, we need to terminate those contracts or remove this class D items from the shelf. So I said, I'm not a territory manager, but my common sense says that these items just take space and just catch dust. So we need to remove them. Hold on, we can't do this. Why? Because we have all signed multi-year contracts with those vendors to supply this as long as we have this contract. Oh my gosh, you have provided great insights, but you are not able to transform those insights into actions. So actionable insights is what really is valuable for the company. So if you remember what I said measurement is important. There are 3 types of data, and transactional data is important. And we look at the 5 reasons why transactional data is important. And within the transactional data, the one which are actionable are the ones which are really important. So what is this actionable transactional KPIs? What are the characteristics of this? Basically 3 things. Number 1, they are focused on decision. So you need to have the right decision leadership to make this happen. Next, number 2, they consume resources, time, money, so on and so forth. If I had to terminate this contract with this vendor, for instance, that means I need to pay a penalty. So do you have the money to pay the penalty for this vendor? No, I don't have. Then, but tough luck. You need to keep this products in your shelves. Next, number 3, they bring change to the organization. So when you talk about actionable insights, it's not a buzzword. It includes 3 main things. Number 1, decision-making skills, which is also about leadership. Next, number 2, your business resources, which could be your time, money, labor, whatever it is. And lastly, it brings change in the company. Are you ready to manage this change? So actionable insights overall is not a buzzword, it is real. And to make this real, you need to look at those 3 things. So how do you select this actionable KPIs? The first thing is, why do you want to know? How much you want to know? And finally, what is the value of knowing and not knowing? So many companies say, oh, we want to be an insight-driven organizations. We want to know much. So the main thing is, why do you want to know? That's an easy thing to know. That's an easy thing to answer. How much? Okay, this is an interesting thing. What is how much, Prashanth? Okay, let me get the insights from 2012. That doesn't work. Nucleus Research did a study, and they said the half-life of data is just about 8 hours. So I went further and did this calculation. The half-life or the weighted average half-life of data in a business is just about 8 hours. So that means if you say, I want to insights from 2015 in 2022, it doesn't make any sense. Given that to the post-COVID world, whatever the business models we had before 2019 or 2020 is even questioned these days. And now when you say, I want insights from 2012 data, it doesn't make any sense when you talk about 2022. So I generally tell my clients about 2 years of data is what you should be looking for when you want to look at deriving insights. 3 rules. Why do you want to know how much, and what is the value of knowing and not knowing? What do you lose by not knowing those insights? Next, number 2, it's all about change management. Who owns this KPI? So I was working for an oil refinery, and we said, if you do all those things, you are going to save $8 million a year. Oh, this number looks great. You are sitting in the head office and coming up with this model, but the person in the refinery in Wisconsin looks at this number and he says, okay, I'm not empowered to do this. I don't have the skills to do this. So who owns this KPI? You. No, I can't take this. Oh my God, then you can't realize this change. And next, number 3, do you have good quality data to calculate the KPI? Many of the KPIs are challenged because the data is not reliable. So do you have good quality data to calculate the KPIs? And next one, how many KPIs should we have, Prashanth? George Miller, a Harvard psychologist, did a study, and they said the amount of information the human mind can process at a time is 7 plus or minus 2. He calls this as a magic number. I use the same thing for KPIs in the dashboard as well. If you look at the KPIs in a dashboard, so anywhere from 5 to 9 is what you should be looking for. 1 or 2 here and there is okay. But if you're talking about putting some 200 KPIs in a dashboard, oh my gosh, it will not work. So I was working for a utilities company, and the VP said, oh, we need some dashboard. And we came up with this dashboard with just about 13 KPIs. So he said, just 13 KPIs in a dashboard? I was it was really amusing. Then I had to educate him about the value of George Miller's number and so on and so forth. So 3 rules to select actionable KPIs are here. So that brings us to the kind of key takeaways and wrap up. So I'll have some time for questions as well. So what's analytics? It's all about questions. From those questions, you will look at the data. From data, you derive your insights. The insights could be descriptive, predictive, or prescriptive, and then you are looking at decision making. The objective of data and analytics is better decision making. That's the ultimate goal. So the culture of data analytics, to have the right culture for the data analytics programs in your company, is measurement for proactive business performance. Are you looking at your performance of your business in a proactive way? Data is a business asset, no doubt in that. But data, it can be a liability if it is not managed well. I tell my clients, go start with the other end. Look at data as a liability and see what you can do to move the data to an asset. Don't start by looking at data as an asset. Oh, Netflix did it. Uber did this. Facebook is doing this. Let's also look at getting value out of data. They are all in a different industry, in a different model. Look at the challenges, the risk associated with the data, and see what you can do to transform the data into an asset. So in my Forbes blog, which is about data as a liability, I've given some recommendations on what you can do to transform the data from a liability into an asset. Again, just storing and capturing data doesn't make your company data-driven. KPIs on the transactional data are the linchpin for data analytics. So I've given 5 reasons why transactional data are important. They have a financial value, twofold impact on accounting. It's a compliance document. It consumes business resources, so on and so forth. When you talk about transactional KPIs, performance KPIs, which is about knowing, and it gives a choice either to know or just keep it, or else you can transform it into an actionable KPIs. When you talk about actionable KPIs, it involves 3 major things, which is decisions, the consumption of business resources, and ultimately change. And finally, all data management is about change management. What is this? You need to manage your process, data, systems, and people. So whatever I've spoken now is from my book, Analytics Best Practices, which was published in 2020. In the May of 2022, just about 2 months back, Book Authority ranked my book as the best analytics books of all time. So if you're interested to know more about this, so it's a very easy to read book. It is written for business people. It's got very little statistical terms or no statistical terms at all. It doesn't scare you with the F value, P value, R square, R, and all those things. Simple, plain business language I've written, so you can go to Amazon and read it. So it's a discount code for my 2 books. Again, my first book is Data for Analytics Performance. You can go to my publisher site, the Techniques, and put the promotion code and get it, or else you can get it from my publisher site and you can get 25% discount code as well. Or else you can go to the e-commerce site, which starts with A, and help the second richest man to get his top position back. Okay, so I worked in many companies, and one of the best companies I worked was GE. At least during the time of Jack Welch, long time back. And this is one of my favorite quotes, and it came from Jack Welch. That means you can get the right insights. That's not a big deal, but converting those insights into business actions is the ultimate competitive advantage, which is actionable insights. That's leadership, focusing on business resources and focusing on change, which is process, people, data, and systems. Thank you very much for your time. I already see a couple of questions being there. So I'll focus the next few minutes on your questions. I'm active in LinkedIn. So if you are, please connect with me in LinkedIn as well. And my email ID is there in the slides.
Great. Fantastic talk. So many things that are really, really well articulated and near and dear to all our hearts. First question, what would you call transactional data in healthcare besides finance data?
So anything which is a function of time, which has got a business event, which is contextual. So when I say contextual, it has got three major things. One is time sensitive. Next, number two, it has got an element of geography or location associated with this. Next, number three, it is associated with the role. So I'm not a healthcare professional, but based on the limited exposure I have in the healthcare domain, for example, the EMR records could be a transactional data.
So like patient visits and any diagnostic readings, all these kinds of things.
Correct.
Gotcha. That's great. So there is a lot of feedback. That's gotcha. That was another one. So any other thoughts before we close, Prashanth?
No, but the key takeaways which I mentioned is my thoughts, which is about data analytics is all about measurement, is proactive business performance management. So if you don't believe in measurement and and being proactive, then you're not going very far with your data analytics program. So that's the main thing. And KPIs are kind of the linchpin, which brings all the business objectives and the technical aspects together.
All right. Hallelujah. Well, it's been great hearing your talk. Thank you so much for sharing, and thanks to everyone that participated in track 6 for CDOIQ, and thanks to my good friend JP Chavet for his heavy lifting during this CDOIQ, and thanks for all of you that listened over the last 3 days. Hope you enjoyed it, and feel free to let us know if you've got any feedback. Thanks again, and look forward to seeing you all again next year, if not sooner.
Okay, see you. Bye-bye.